Hey everyone, it's Joe Friday, and I just want to do a quick video to show you guys how I do my calculations for the potential ABC patterns that you always see me post. It's really rather simple. You just really need to figure out where leg C is, right? So usually what you look for is somewhere between the 61 and 78% fib retracement. So and that works both bearish and bullish, right? So here you go, if you have TOS, you go to your drawing tools, fib retracements, and what you do is find the high, move it over from here where you think price is, find the high, go to the recent low, swing low, and there you go. So you can see now that this zone here is all a potential zone C. 61.8 being like a perfect place for C to turn lower, but it could be anywhere between 50 and 78. All right, so you need to also mark your price levels. You can see a high up here. This actually should be A, my bad. And there you go, you got A, B, C, and this is the reversal zone for C, right? So the PRZ, potential reversal zone. And if that works out to turn somewhere over here, you go to your fib extension tool, and on different platforms you call something else, but basically it's a 3-point move, and you go from A to B to C, and this gives you where leg D should be. Now leg D is usually 78 to 100%. I like to go for 100%, but anywhere in the zone technically can meet the requirement for D. So it could, just hit the top of the zone here at 61.8, 78.6, but my preferred target is somewhere between 78 and 100, usually 100, maybe even 127. It could even go down to the 161, but for the most part, this is usually where I'm looking, somewhere in the heart, in the meat of the move, if we get it. These fibs up here you can forget is really 50 to 78, preferably 61 to 78. 50 is sometimes a little short, so you don't get the deeper pullback reversal that you want to see, but it can happen. So just be aware of that fact. And then once you see price break down below this recent swing high, that should confirm leg D is in progress. So where you guys want to short is really up to you, but I would recommend waiting for a break of support here. In this case, it's about 180, and I'll just put that price level there. So when you see price break below there, that's also the 14 RSI moving average on the daily. So that's support, and you see that break. That's probably a short signal. Probably would have stopped maybe above the high here. Depending on your risk tolerance, you could always make it lower, and you just let it ride its way down. That's just the way it works. It's more or less pretty simple. I'll show you another example. It works on any time frame, actually. So let's see. Let's try lift. If we go to lift, now this would well, let me just go back for 1 second just to show you that. So this here is really a bullish setup, because the idea is you want to go long from D. But there's two ways to play it. You can go short from C, as well, or you can just wait for D and play the bounce. And that's really totally up to every trader how they want to play it. So clearly, you can see this was an uptrend, came back down, started an uptrend again, but it looks like this is just a retracement, some kind of dead cat bounce, and that should result in C. Leading down to D, and also obviously you got to take that with resistance, right? Nothing in a vacuum. You can see we have this resistance zone right here, about 197, 198. So it's perfect here where this is going right now. You can see support, broke down, resistance, boom, 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 came back, resistance, and now the drop to D, and you could also see you have the bearish divergence. So the more factors you have in your favor, the more obviously probabilistic the trade is going to be, right? The high probability trade. So you got price into resistance, you got it also into 61.8 fib resistance, and you got a bearish divergence. And when this 180 breaks, probably going to head down to this green zone somewhere. So even if it only goes to 61.8, makes a double bottom at B. You're looking at $40 drop. So that's how you play that. So back to lift. And you'll see, I'll show you how this one worked. We just put some, excuse me, price levels in place. All right, so now you get your fib tool out. First thing is you want to find out where was C. So you go here. Okay, that was the high. Here's the low. Oh, didn't catch. There we go. Oh. Toss is being a pain in the ass tonight. Yeah, didn't take it again. Look at that. All right, son of a bitch. Okay, this thing is in retard mode here. Okay, there we go. All right, so you got the high, and there's the low at the bottom here. Find the low. And there you go, right here. A little bit above the 61.8, between 61 and 78.6. Right, so what you have here is you have C, right? So get rid of these longer fibs here and get rid of 50%. Just keep the 78 and the 61. And then you have it here, A, B, and this was C. Now this is done already, so I just wanted to show you how it worked out. Had you obviously gotten this before it dropped, you would have shorted here at C, and then you would see that had you had those calculations in place, here's A, here's B, and here's C at the top here, top of C. And there's your target, 100%. All right? Right here at D. Would have been a perfect strike. And then you bounced. That's why I said this is a reversal zone, so you would have gone long here or go short from C. Pretty simple, right? I'll do one more for you guys. Let's look at copper here. Again, just trying to figure out what was going on. And if you take a drawing tool again, get your fib retracement out. Let's see here. Where is this? All right, so we go from here. We get this swing low to this swing high. And here you go. Now, obviously, this is a reversal zone for up, right? So this is going to be green. I like to keep my colors coordinated. So, sorry, so you got A, B, C. And again, this is complete already, right? So just go and find your tool. And here's one, A, B, C. And D would have been 100, right? So I went a little higher. A, B, C, 100, and the bottom fell out. So this is a pretty good example of a short. That would have been a perfect short. And confirmation, of course, came when we broke this 14 RSI moving average, and certainly below this support zone, right? Or support level, because you can see that we were right about, I guess it's right about there. So let's say this was resistance. Once you broke that that support, what was resistance, you got above it, came back, acted as support, bounced again a little higher, came back, second touch, it broke below the 14 RSI moving average, and then it just shit the bed all the way down. So that would have been a beautiful short. And usually, whether you're shorting or going long, the measured move from D, you just take your fib retracement, and it's A to the top of D, and I'll just make this white to make it a little clearer for you guys. And the measured move is usually 61 to 78 or 127 to 168. So it came a little shy of the second or T2 target, but went right through T1, or would have been T1 in the white zone here. But it really depends if you go, like I said, long from C or short from D. Certainly play both. Depends on, how you guys want to trade it. But the key is always trying to find C. You can find C. 61.8 is a perfect spot. And if you can get that, that's a pretty good probability-wise trade. And it should head higher or lower, depending where C is. And you use that low as your stop point. And the same thing if you were short, if you went to lift. Let's go back to lift. If you wanted to short, you would have just put your short right about up here, your stop, I'm sorry. And you have basically a $1.50, $2 risk, and your reward is like $15. I mean, ridiculous, $25. So it's these are great things to know. You just got to be able to recognize them. It takes a lot of work, and you need to have an eye for that leg C. So anytime you see a stock move and you see what you think is a retracement, remember C is always a retracement. You want to try to see if you can figure out where that 61 to 78% fib or even 50% is, so you can kind of look for that zone for the reversal for C, and hopefully that'll lead down to D. And like I said, it works on all time frames. We go back. I go to natural gas here. We go to an hourly chart, and here's an hourly chart. Didn't even look at this. I can tell you right now, this is probably a good one. Here's A. All right. A. B. And here's C. And if you caught that, well, let me get rid of this first. If you caught that, and you just did your calculations, A, so 1, A, B, and then C. And now you have your that drop all the way down here. So you would have looked to exit somewhere around D. You could have trailed your stop. You see it went down a little deeper, went to 161.8. But these are zones, so you know there's really no way to tell other than using these fib levels. And what you can do is you can just trail your stop down, and you can see how this RSI moving average, you know, got down, and then it was resistance, went up, came up, resistance, dropped, came up, resistance, dropped, came up, a little resistance, and then finally broke above it. So for short-term traders, you know, once you get above this 14 RSI moving average, the odds favor it continuing up. That's a bullish move. And you just put a stop right below it, so you can really keep your wrists tight. And if you get stopped out, you get stopped out. It goes back over, you go back long again. And you keep trailing your stop somewhere below this moving average, and you can ride it up. And then when you finally break, you know, that's bearish, and the same thing. So anyway, it's pretty simple. I think I can make it any simpler than that for you guys. Really just comes down to figuring out where point C is, whether it's a bearish or a bullish reversal. All right, so that's it. All right, well, just remember that even with these ABCs, they don't always work out, just like anything else in trading. And also, like I said before, you know, you can't look at things in a vacuum. Try to get as many things on your side as possible to increase the probability of the trade working out or the pattern working out. And that includes looking at the trend, looking if you have an indicator, if we're coming into an oversold, overbought, depending on if you're short or long, trend lines, divergences, but really it comes down to support and resistance like anything else. So again, just try to go through different points to see what else is on your side to suggest that maybe leg C is done or leg D is done, or perhaps if the pattern is going to invalidate. Like I said, there's nothing 100% in trading. You just try to find things to help you increase the probability of success, and the more things on your side, the better. All right, that's it, guys, and I hope you found it useful.